Before your next state pension payment lands, I want you to do one thing. Actually open your banking app and actually look at the number properly, not just glance at it the way you normally would. Here's why. There are two completely separate reasons, right now, today, why that number might be wrong. Not might have been wrong years ago and already fixed, wrong right now, potentially, for you, sitting in your account every single month without anyone flagging it. One of them is a genuine underpayment error that a Parliament committee has confirmed affects tens of thousands of people, mostly women, some owed genuinely life-changing amounts. The other is a tax calculation mistake that only came to light a few weeks ago and could mean you've been paying more tax than you legally owe. And I want to deal with something else too, because I know a lot of you have seen the headlines about the DWP getting new powers to check pensioners' bank accounts. And I know that's made some of you anxious. I'm going to tell you exactly what that actually means for you, because for most people watching this, it means almost nothing. And I think that reassurance is worth having clearly, rather than left as a vague worry sitting in the back of your mind. So, three things. Two of them could mean money owed to you. One of them should genuinely put your mind at ease. All three are worth 5 minutes of your actual attention, not just a passing thought. If this is useful, hit like before we get into it, because there's a good chance someone you know is one of the people this actually applies to, and they need to hear it too. Let's get into the details properly. Let's start with the one that's been going on the longest, and the one with the most solid paper trail behind it, because a House of Commons committee has actually investigated this directly and put its findings in writing. Back in 2020, it came to light that the DWP had been systematically underpaying state pension to certain groups of people for years, in some cases decades, because of how its aging computer systems handled specific categories of claim. This wasn't a scam, and it wasn't fraud on anyone's part. It was the department's own systems failing to automatically apply increases that people were legally entitled to. The groups affected are quite specific. So let me walk through them properly, because if any of these describes you, or your mother, or a relative, this is worth taking seriously. If you're a married woman who reached state pension age before April 2016, and your own basic state pension works out at less than 60% of your husband's basic state pension, you should have been automatically topped up to that 60% figure. For a lot of women, that automatic top-up simply never happened, because it relied on a manual trigger that the department's own systems kept missing. Separately, if you're a widow and your basic state pension wasn't increased when your husband died, based on his own contribution record, that's another category entirely, and again, it often should have been automatic and simply wasn't. And if you're a woman who divorced after you'd already reached state pension age, your pension should have been reassessed at that point to reflect your ex-husband's contribution record. And, in a significant number of cases, that reassessment never took place either. Here's a figure worth sitting with for a second. A parliamentary committee found that around 94,000 of the pensioners affected by these errors are still alive today, and the department estimates it can trace most of them, with average payments, once corrected, working out at around £8,900. Some individual cases have been found where the underpayment ran into 6 figures. This isn't a small clerical rounding error we're talking about. For some families, this is genuinely life-changing money that's simply been sitting unclaimed because a computer system failed to do something it was supposed to do automatically. Now, the DWP has been writing to some of the people it believes are affected, but by its own admission, a significant number of those letters have gone unanswered or never reached the right person at all. So if you fall into any of the categories I've just described, married before 2016 and potentially under that 60% threshold, widowed and never reassessed, or divorced after reaching state pension age, it's genuinely worth contacting the pension service directly and asking them to check your specific record, rather than waiting to see if a letter eventually arrives. And if you're helping a parent or an older relative who might be in one of these categories, particularly if they're a widow who might not think to question a number they've been receiving for years, it's worth raising this with them directly too. Now, let's move to something considerably more recent, because this one only became public knowledge in the last few weeks, and it's a completely different kind of error, involving a different department entirely. This time, it's not the DWP's payment amount that's wrong, it's how HMRC has been taxing that payment. Here's what happened, as plainly as I can put it. Under HMRC's own published rules, when your state pension amount increases each April, the tax calculation for that transitional year is supposed to use a split-week method, working out a small portion of the year at the old, lower rate and the rest at the new rate. Instead, the DWP has apparently been supplying HMRC with figures calculated on a flat, full-year basis at the new, higher rate from the very start, ignoring that transitional period entirely. HMRC then used those figures without correcting them, which means the taxable value of pensioners' state pension income has been recorded as higher than it should have been under HMRC's own rules. Applied across millions of people, even a modest weekly discrepancy adds up to a genuinely significant total sum in overpaid tax nationally. I want to be careful and precise about where this stands right now, because it's still a developing situation. HMRC has acknowledged the error and apologised, but as things stand, there is no automatic bulk correction process confirmed yet, and no committed timeline for automatic refunds. HMRC has said it hopes to resolve the underlying methodology with the DWP this summer, but that is a hope, not a guarantee with a fixed date attached. So, here's the practical point. Don't sit back and wait for a letter or an automatic refund to simply appear, because there's no confirmed promise that one is coming automatically for everyone affected. If you receive the state pension, and you also pay income tax, it's worth logging into your personal tax account on gov.uk and actually reviewing your tax history yourself. If it shows an overpayment, you can request that back directly. And if you've already filed a self-assessment return using a pre-filled figure that you now suspect was wrong, you can amend that return, though there are deadlines attached to how far back you can go, so it's worth checking the current position for your specific tax year rather than assuming you've got unlimited time. Now, I promised you something reassuring too, and I think it genuinely is, because I know this next bit has worried some of you. You may have seen headlines about the DWP getting new legal powers to check bank accounts for signs of benefit fraud, and it's understandable that a headline like that, on its own, sounds alarming if you're a pensioner who's worked hard and saved carefully your whole life. Here's the actual confirmed position. If you receive only the state pension and nothing else means tested alongside it, you are entirely excluded from these new checks. The power specifically exists to flag accounts connected to means-tested benefits, things like universal credit or pension credit, where eligibility genuinely does depend on your income and your savings. The state pension itself has no savings or income test attached to it at all, so there is simply no legal basis for a bank to be asked to check anything about an account that only receives the state pension. This has been confirmed directly by government ministers, and it's written into the actual legislation itself, not just a verbal promise that could quietly change later. Now, if you do also receive something means-tested, pension credit is the obvious example for a lot of pensioners, it's worth knowing what these checks actually involve, so you're not left imagining something worse than the reality. Banks aren't given access to your spending habits or your full transaction history. They can only send a simple flag if an account appears to breach a specific eligibility limit, like a savings threshold tied to that particular benefit. And critically, every single flagged case still has to be reviewed by an actual human caseworker before anything happens, following changes specifically made in the House of Lords to prevent automatic decisions being made about anyone's benefits. So even for the group these checks genuinely do apply to, there's a real person involved before any action is taken, not an algorithm making a silent decision in the background. So, bringing this all together, here's what I'd actually suggest doing this week. If you're a woman who reached state pension age before April 2016, particularly if you were married, widowed or divorced around that time, it's worth contacting the Pension Service directly and asking them to specifically check whether you were affected by the underpayment errors rather than waiting for a letter that might never arrive or might already have been missed. If you receive the state pension and pay income tax, log into your personal tax account on gov.uk and actually look at your tax history for the last couple of years, because the flat rate calculation error could mean you're owed money back, and there's no guarantee of an automatic fix landing in your account without you checking. And if you've been quietly worrying about the new bank account checking powers, you can genuinely put that worry down, provided you only receive the state pension itself, because the law specifically excludes you from this. None of this arrives with a personal phone call laying it all out for you. That's exactly why it's worth taking the 5 minutes this week to actually check your own bank statement, your own tax account, and your own specific circumstances properly, rather than assuming everything is definitely correct simply because nobody's told you otherwise. If this helped, please share it with a parent, a widow you know, or anyone who might be one of the people genuinely owed money here. Because in some of these cases, we're talking about sums that could make a real difference. Subscribe if you want more of this, plain English, checked properly against real sources, and I'll see you in the next one.